Okay, everybody, it's me, Gregory Mannarino. I'm trying not to laugh or cry. One of the two. Look, wow. That's all I have to say is wow. And I know that you're not staring at the stock market, although it did pretty much crater across the board. That wasn't where the real story was, people. Again, it's the debt market. Let me just say this. There are some kind of people, I'm just saying, that like to swim in like acid rain, that like to rub themselves with flesh-eating bacteria. If you're one of those kind of people, well, it's just lovely today in this market. But if you're one of the normal people out here who doesn't enjoy, slugging themselves in the genitalia or something along those lines, I suppose you could say it wasn't such a great day. Okay, whatever. All right, look, let's step back and let's kind of figure this stuff out. Okay, really, let's put the joking aside. Here's the number I want you to look at. I've been showing you this lately. You see that number right there? That's the number to watch with regard to the S&P 500. That number, or closing below this lovely number, a close below that, would signify, by definition, lovely people, a bear market in the S&P 500. But again, look, the real story was the debt market. The 10-year yield today. Okay, let's put this together. We actually, at one point, went above 3%. Look at it now. We cratered like 11 basis points with regard to the 10-year yield. That, my friends, is a tremendous move. That is, honestly, panic. Panic. When you see a move like that, that is people, just throwing, the baby out with the bath water, and that's what you get. Dow Jones Industrial Average down like 1,150 points. The Nasdaq falling off. Nasdaq. Say that 3 times fast. Nasdaq. Falling off of a freaking cliff, and the S&P 500 taking a nice fall here. But clearly, with a move like that, look at the setup this morning. It was vastly different. Everything didn't look so bad. Stock futures were lower, yes, nothing major going on. Okay, you had the 10-year yield, a shade under 3%, the slightly stronger dollar. Crude oil, okay, crude got hit today. It was a pan sell-off, except for the debt market, which, again, a lot of people fleeing the market, fleeing stocks, and jumping into the safety of debt. I'm telling you, it's a freak show on a massive scale. Anyway, look, so with that said, yes, lovely, fantastic, tremendous, whatever. If anything, it's entertaining, honestly. I can't imagine anything else that would be more entertaining than this. It's out of control. So anyway, we don't rattle. You know that. We look at this market, we're waiting to see what happens. If we breach this, if we close below that number, look, I said clearly multiple times that this market couldn't, if this market would give back the gains that we made on Friday and the gains that we made yesterday, well, it wasn't a pretty picture. Well, that's exactly what did happen. We gave back all of those gains and then some. So what does it mean moving forward here? I guess we'll see. Today was clearly panic, and I'm talking about panic, and there's a lot of reasons for that. I mean, you got major retailers here, Walmart, Target, warning about, well, you and I already know. Prices continue to surge here. The consumer is not very strong, despite the contrary being told to you and me via the propaganda ministry, retard presidents, and everything else here. Oh, the consumer's great. Everyone is rich. You are doing so good. And then you got the Federal Reserve today pointing their fingers again at, Ukraine, Russia, COVID, supply chain, and that's all the reasons for surging inflation. It has nothing to do with the fact they've been inflating since QE1 on a scale that is beyond belief. And then they're going to continue doing that. You see, a lot of the sell-off today was because, again, on the information that we continue to get that inflation is, in fact, raging out of control. This is by design. You all know that. The Fed is going to be more aggressive. They ain't being more aggressive. They don't care. They don't care about it at all. We're going to raise rates until inflation starts to calm down. Duh. Good. Let them keep doing that. Ain't going to make any difference at all. Honestly, it's so freaking out of control. We found out some other stuff too. Then we had Yellen, Janet Yellenstein. She's another thing too. Look, this is an it. They're all its, and she's a supreme it. Also pointing over at the Ukraine. This is a quote: "Ukraine war fallout is causing an economic slowdown." Duh. Well, it's been slowing down since before that, but it's getting worse now. Our economy has been in free fall for years, all right? But you see, because the mainstream propaganda, along with presidents and other freaks, have been telling you how great we are. Oh, yeah, look at that stock market. Who does this remind you of? Look at that stock market. Our economy is so strong. Yeah. It's this total bullshit. There's no connection between the two anymore. And is it going to get real? Oh, yeah, it's going to get real. But today, again, understanding the dynamics here, when you see all that cash going into the debt market, the 10-year yield coming down, that's just fear. That's extreme fear. That's panic with an 11 basis point move. The 10-year yield, that's pretty epic if you ask me. But we did see, like I said, crude oil falling under pressure, cryptocurrencies, gold and silver, knee-jerk hiring, all the things that you would imagine that you would see. Again, knee-jerk hiring the dollar in an extreme fear situation. Well, that did happen today. I'm writing stuff down here. Let me see what else I got for you. That's just all kinds of lovely. I told you about the blame game, Yellen, the Fed. They're on the same page, quite obviously. Retailers warning. This is news. Really? Really? Honestly? You knew it. I knew it. The consumer is sucking wind. You understand? They're getting their skulls sucked out, their brains sucked out of their freaking ears, with real wages falling off of a cliff, cratering at their fastest pace ever, based against skyrocketing inflation. But everything's great. You know how you can tell? Because you got retard presidents, Fed presidents and freaking chair people, and Yellenstein herself telling you how great everything was, except for now. Oh, maybe it's not so true, is it? No, it's not. And it's only going to get worse. People, get used to it. Get used to it. Look, my intention here is very simple. I'm not going to deviate from anything at all until the implosion in the debt market. I don't care what the stock market does. I'm telling you right here and right now, I don't care what the market does day to day, week to week, even month to month, until that implosion in the debt market happens. When we see rates start to spike, not plunge, 11 basis points in one day. For example, if today the 10-year yield would have risen 11 basis points today, I would be like, whoa, this is really has the potential to get extreme. What do we know is going to happen? What has this guy explained to you since, I don't know, a long, long time, that the market, the S&P 500, will be 80% lower than its all-time high at one point in the future here. 80%. That's a sell-off of epic proportions. Okay, that is going to happen in my view at one point. But again, when we get the meltdown in the debt market, not what we're seeing here where people are rushing to buy. I got to own it. I got to buy that debt. I must own it right now. Help. That's panic. It's panic. When you see a move like that, it's panic. That's all it is. The opposite is going to be panic too. When you see that the debt market sell off and you get a rise of 11 basis points or even more than that in one day with regard to the 10-year yield, you will know that is it. That is it. This is fear, what we're seeing here. Hey, that rhymes. But in my view, I will not stop looking for opportunity. I bought stock today. I bought Johnson & Johnson early today. I will look for opportunities. I will continue to bet against the debt, become my own central bank, look for opportunity to own companies that I happen to believe are going to do well moving forward at a cheaper price. Nothing makes me happy. You want to see my happy face? This is me. This is me all happy. If I can own a company, whatever it might be, because I told you the gloves are off. I don't give a damn anymore. Cheaper, that's going to pay me to own it via a nice dividend. Well, I'm going to take it. Okay, I'm going to look for opportunities, and there are deals to be made, like I said. So look, I hope you're not falling into this whole panic thing. I know there's a lot of people out here. Like, you know my take on it. The only thing that this guy cares about, the only reason why I'm holding gold and silver, the only reason why I am holding cryptocurrencies, okay, and I own like 7, and I posted the exact ones that I own on my free newsletter. Link in the description of this video. I tell everybody via my newsletter all kinds of neat little things. All kinds of neat things, okay? I hope you at least are subscribing over there and you get a little inside information as to what's going on here. But I'm not going to change a damn thing. I'm not going to change, okay? I'm holding gold and silver. I'm holding cryptocurrency and all kinds of other assets for the inevitable implosion that is going to occur, and that's it. Everything else doesn't matter to me at all. Okay, markets go up, markets go down, you get bear markets, bull markets, and everything in between. Don't faze me. Don't faze me at all. As you can see, I'm happy. I'm also a little nuts. And no, I don't enjoy slugging myself in the genitalia. I don't enjoy rubbing myself all over with flesh-eating bacteria, nor do I enjoy swimming in pools of acid rain. But this is all entertaining stuff. People, come on. You got to admit it. One way or the other, at least you're getting entertained. All right, look, so that's really the story right here. And it wasn't the stock market. It's the debt market, okay? That's really the big one here. What's going on here in the debt market, that's what people should be looking. Why is it that the 10-year yield took a nosedive here of 11 basis points? That's fear, extreme fear. Okay, we didn't get a rise of 11 basis points at a rapid basis, nor followed by another 10, followed by another 10. That would be the moment of implosion in the debt market, which is going to destroy everything. It's going to melt down the world. Forget about melting down the stock market. It's going to change everything. When this bubble market, and it's a hyper bubble, like I just said, 80% loss with regard to the S&P is a reality at one point here, and I'm just a tsunami of cash moving from one asset into another set. You know that. That's my only concern. One. The rest of it is just conversation. It's really the truth. All right, this guy loves you a lot. Please comment, share the video, and as usual, I'll see you in the morning.